Okay, welcome back to Roxham TV. I'm your host, Jamie. So, if you open the charts today and thought, is the market pumping or crashing? Here's the truth. The market isn't trading fundamentals right now. It's trading headlines. Risk is back on the table and headlines are driving price. And today's show is basically one theme, politics, and then we have AI tech and also something to do with trust. We are starting with the global news you need to know, and then we'll jump straight into Bitcoin charts and technicals because you guys already know my view. Narratives follow price, not the other way around. So today's show is simple and fast. What matters, what's noise, and where the money is moving next. We'll break down Donald Trump's new Gaza plan, South Korea's surprise GDP contraction, and why stocks still ripped. Amazon's new wave of job cuts, plus the widest headline of the week, the Bank of England getting warned that aliens could crash markets. Yes, seriously. But the real point is what happens when trust breaks and why Bitcoin always becomes the exit plan. Then we'll go straight into the crypto side. Bitcoin IPO on the New York Stock Exchange and a major Ethereum signal that being validator exists just hit zero while the entry queue is exploding. What does that mean for Ethereum? And after the global news segment, we're pulling up the Bitcoin charts and checking the only thing that never lies. Of course, that is the price. So we have a packed show today. Let's dive into the first story, first news of today's show. So what we've got the headline that sounds very unreal is Donald Trump just pitched a new Gaza like it's a luxury real estate project. I'm talking beachfront resorts, luxury housing, tourism hubs, and basically turning Gaza into a coastal business zone. And this isn't just a random quote. Donald Trump is saying, trying to be a brand new thing he's launching called the Board of Peace, and he's claiming this board could basically control the post-war future of Gaza. So here's what Donald Trump laid out at Davos. He described a rebuilt new Gaza that looks like more a luxury apartments, beachfront resorts, major commercial development, and for foreign investment-led reconstruction. And his argument is basically this. Instead of Gaza going back to the old situation, he wants it demilitarized and rebuilt into something prosperous. Like the way he framed it is very direct. Like Gaza shouldn't be a permanent crisis zone. It should be a destination instead. And now here's the biggest story behind this. Donald Trump said this plan, this newly launched plan, the Board of Peace Initiative. So he's positioning this board like a new global mediator, like the group that would oversees post-conflict arrangements, pushes security framework, and brings in foreign investment and basically act as a wider platform for conflict resolution. And Donald Trump's tone here is what made people freak out because he claimed this board could basically do whatever he want or whatever we want in Gaza. So to critics, this sounds less like diplomacy, more like control, of course. So, what's the Donald Trump's claim versus reality? Like, what has been confirmed so far during that conference? So, Donald Trump suggested that vision would help unlock a ceasefire and increase the humanitarian aid access. But here's the problem: those claims are being disputed by diplomats and aid groups, and right now, the biggest issue is details are pretty vague. And there's no clear structure on what sits on the board, what legal authority it has, and whether Palestinian have decision making or any decision power at all. So this is a huge concept, and everything is still very blurry in terms of the execution by now. Okay, and this is where the debate really heats up because critics are saying this plan risk doing few things, basically three things. Like, for example, the first one, it sidelines the local, local situation, if they have any power, like because if outsiders design Gaza's future without the local political consent, it becomes reconstruction without real sovereignty. And then the second issue it brought to light is that it ignores the political root of the conflict. Like, sure, you can build resorts, but if the underlying political issue isn't resolved, you are just putting luxury branding on top of the instability of a country. That issue is that it turns Gaza into a real estate project. Like, of course, that would suit Donald Trump's background very well. But the hardest criticism is that this reads like an outside-led development plan, not a peace plan built for the people living in Gaza. So the fear is this becomes Gaza as a project, not so much as a nation with rights. And if we get into details of exactly what Donald Trump said during the conference, so he said this: "I'm a real estate person at heart, and it's all about location." And I said, "Look at this location on the sea. Look at this beautiful piece of property. What it could be for so many people." So saying this, it scared the market. If Gaza people get a say into this development plan. Another big reason like this matters, why we're spending so much time on this news. Donald Trump's board of peace could act like a parallel system that compete with the UN, the existing peace process and traditional diplomatic frameworks. And that's why people are watching this news very carefully. Because if Donald Trump starts building his very own conflict resolution structure, that could reshape global diplomacy into something more personal, more deal based, and less institutional like. And whether you like Donald Trump or not, this is undeniably a major shift. So, a final key takeaway from my side: Donald Trump is pitching a future where Gaza becomes demilitarized, rebuilt, and investment driven, trying to rebuild the tourism culture there as well. He's trying it to a new board of peace, and he's presenting it like a board reset of decades of failed management. But critics are saying like this isn't about peace. This is basically full control of Gaza by the US, and the biggest unanswered question is still the most important one. Who gets to decide what Gaza becomes? Is it the US or the local there? Or Israel? There's still, point being, there's still so many questions being unanswered, and we'll keep a very close eyes at as the developments goes. Moving on to the next piece of news and kind of building up on shift gear a little bit and take a look at what Asia is doing and in terms of South Korea's economy, because South Korea economy just shrank and not like slower growth, but not like soft landing, but actually contracted. And it surprised the entire market. But here's the twist: Korean stocks were actually pumping, and it's pumping hard. So today we're answering one question: is South Korea breaking or is it rotating into an AI-led comeback? So what just happened? This news broke out yesterday. So South Korea economy contracted by 0.3% in Q4 2025 when markets expected growth. That's the biggest drop in about 3 years, and it signals something real is weakening under the surface. And the two main reasons were pretty clear. First of all, is the construction investment fell hard. And second is the exports dropped, especially in sectors hit by US tariffs like steel. For the full year, South Korea's GDP growth slowed to around 1%, about half that pace of the year before. So the story is the economy is losing momentum, and it's not just 1 month issue. So why the economy slumped? Well, I guess you ask. The biggest pain point here is construction. So when construction drops, it usually hits everything. So it hits jobs market, it hits the materials market, local spending, and also confidence, which is very important in the economy. And on the export side, okay, if we take a look at the export figures, if we take a look at the past year performance of South Korea, it's actually not bad. So it's going up. Like, of course, maybe there are some months that are contracting a little bit, but overall, it's still looking really strong. But tariffs, of course, like tariffs, global demand pressure, are making it harder for the old engines, like heavy industry, to carry the entire country the way they used to. So this GDP miss is basically South Korea admitting that the old growth playbook isn't enough right now. And this is also why it's so confusing for now. And if we hop onto the Korean stock exchange, stock index, this is where it gets really confusing because, like, on the day the GDP came out, Korean stocks surged and the benchmark pushed to record levels. Everyone is asking why. Well, I have an answer, a possible explanation for this scenario. Well, maybe the market is trading on AI right now because, like, otherwise there's no reason to explain this exponential growth. So for the past 5 years, for the Korean stock index, it generated 58, well, close to 59%. That's really good. And that gain becomes so exponential, especially in the past year performance. And as you can see, still sitting at all-time high. Let's see if we could break $5,000. Let's see. So investors, what we could get out of this news, and on the same day, Korea's stock index broke a new all-time high. So investors didn't look at the GDP and think, okay, maybe we're heading for recession. They look at it and thought, okay, maybe there's going to be more stimulus on the way. Maybe there's going to be more tech investment or more chip demand. And the biggest winners were obviously the big institutions. Like if you go to the stock exchange, of course, it's going to be Samsung Electronics and also SK Hynix, because Korea's biggest advantage is still semiconductors. And this is the part where it gets so important. South Korea isn't trying to fix its economy with real estate or cheap exports anymore. They're trying to do the high-tech stuff with AI, with chips, with advanced manufacturing. So while construction is weakening and traditional exports are slowing, Korea is basically saying, we will build the next economy. And that's why the government is projecting stronger growth in 2026, and why the central bank is still watching inflation and stability. They don't want to panic cut if the AI investment cycle is about to kick in. Personally, I'm really impressed with the whole South Korean history, because how they bounce back from the earlier 1950s. So I actually have quite strong conviction with South Korea's economy as a whole, and especially when we add in the AI segment. So here's what it becomes so interesting, because South Korea is literally running AI like a survival game. And the program is called AI Squid Game, because it's basically for this whole program is backed by government funds, so government AI funds. But there is criteria. So you would get judged every 6 months. And if you lose access to GPUs, funding, and everything. So in other words, this is really pressure intense competition going on in the whole tech industry within South Korea. And this forced companies to improve fast, to ship fast and win fast. And this is directly connected to the whole GDP story, because Korea needs a new growth engine, and the AI is the only thing that they're betting the country on. But to be fair, it's not just Korea. Like the whole world, we are moving towards AI developments because world population is shrinking, especially in developed nations. If countries need to push up the GDP, AI is the only solution right here. So that's why South Korea is getting into the game because they don't just want to be sitting on the sideline and watching US and China take the realm. They are trying to be the third competitor within the AI realm as well. So what we should watch next from South Korea. Like, if you want to track whether Korea's AI comes back as real or from for a investor perspective mindset, first thing you need to watch is the chip exports. Like, if chips stay strong, Korea, of course, will stay alive. And second of all is the AI data center. Like this is the capex cycle that can drive 2026 growth. And that is to watch the global trade pressure. If US tariffs expand or supply chains tighten yet again, Korea would get hit very fast. So Korea's future is basically tied to one question. Can AI be strong enough to offset everything else slowing down? So that's the clean takeaway for this show. For this segment. South Korea's economy just contracted, and that's real weakness. But the stock market is telling you something else. AI is becoming the new GDP engine. So the traditional side of Korea is slowing down, but the AI side is very much catching up. All right, so we will take a short break for now and coming back to you. We also have more AI news coming from Amazon because right now there are more like thousands more jobs could be cut because of AI. So stay with us and we're going to dive into the details.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future.
the world as well. So even if AI isn't the headline reason today, they're not admitting they're cutting jobs because of AI. AI is clearly part of the long-term plan. So here's what matters. Even if Amazon cuts the full 30,000 corporate roles, that's close to 10% of corporate staff. But Amazon, let's not forget, they still have 1.5 million total employees, mostly in warehouses, delivery, and logistics. So this is not Amazon collapsing. This is Amazon reshaping the white collar side. And that's a signal we have been seeing across big tech. Basically, the vibe right now is less hiring, more efficiency, and fewer of those extra layers. Main takeaway for this news is that Amazon is basically preparing another large corporate layoff wave as soon as next week, aiming toward 30,000 white collar jobs cut in total. This is less about short-term financial panic, but more for Amazon saying, okay, basically we need to run lean again because AI allows us to cut costs. So, and if AWS, Prime Video, and retail teams are all affected, it tells you that this is not a small adjustment. This is a company-wide reset and perhaps the world reset towards AI. Okay, moving on to more crazy story, and this is actually a quite fun one. So just like stay with me on this because the Bank of England is now talking about aliens as a financial risk. I thought this is a meme, but apparently it's actually a real thing. So yes, aliens, not inflation, not war. That's not the concern about, not a recession, but right now, Bank of England is concerned about aliens. And before you laugh and click away, this matters because the real story here is actually about trust, in my opinion. So if trust breaks, markets don't wait and money would move very instantly to the assets that they trust. So what happened? How did we get to here? An actual warning being issued by it's actually a former member of Bank of England. So a former Bank of England financial security analyst, someone who worked there for around a decade, reportedly warned the Bank of England to prepare for a crisis scenario when the US officially confirms non-human intelligence do exist in this world. Meaning, if the US ever comes out and says, yeah, like those things in the sky are actually real and they're not human, she believes markets could go into full panic mode. Not because people love sci-fi, but because confirmation like this could shatter confidence in institutions overnight. So why would aliens break the financial system? Like everyone is very confused with this news, and of course, like it definitely catch eyeballs, catch attention. So here's the idea in plain English. Markets are built on belief, and believe in governments, believe in banks, in laws, and that belief that the systems work tomorrow the same way it works today. So if that belief eventually collapses, even for just a 24-hour period, you don't get a slow sell off. You get bank runs, chaos in payments, people basically rushing to withdraw their money, and everyone trying to escape the system at the same time. And that's exactly what this analyst is very warning about. They don't think basically long term. They do one thing, which is to protect themselves. That means people would rush into whatever they believe is the safest bet, for example, like gold and possibly Bitcoin. And this is the wild part. The warning specifically says people might run towards digital currencies like gold, like Bitcoin, if they question the legitimacy of government-backed money. So the alien part, of course, it sounds very crazy. I initially thought it was a meme as well, but the reaction part is actually very normal human behavior. And this is why Bitcoin is even being mentioned. Bitcoin doesn't need a central bank. It doesn't need permission. It doesn't need a government guarantee. So in a moment where people feel like, okay, wait, like do the people in charge even know what's going on, what's happening up in the sky? Bitcoin becomes emotionally appealing because it feels like the exit door, combined with self-custody and no counterparty risk. Whether that's rational or not, that's the psychology basically crypto Twitter is putting out right now. So the scariest part isn't the stock market dumping. The scariest part is if normal payment system freeze. Because if banks start failing or systems go offline, you get real world panic. People can't pay for fuel. Supermarkets can't process payments, and supply chains will get disrupted. And of course, that will spread the fear fast and rapidly. So this is less about aliens invading. It's about how fragile modern finance is when confidence disappears. So while this news, especially headline, is very interesting, there's a clean takeaway. This headline, okay, it sounds like a meme, but the logic is actually, I'm supporting the logic behind. It sounds real. So trust is the foundation of the financial system. And when trust breaks, money runs to safety nets. And the fact that even a theory of alien confirmation scenario points to gold or BTC tells you something deeper. People aren't scared of UFOs. They are scared of a system that can break in hours. So speaking of gold and BTC, let's take a look at the price action for now. So this is, I'm using Roxum Exchange because everything paired with BTC, that is very convenient when we're doing analysis right now. So we see this chart going up, like a lot of viewers of this channel, they are Bitcoin investors. So like on first glance, you think, okay, this is really good for Bitcoin, but it's actually vice versa. That means Bitcoin is losing value against gold. So gold is like, in other words, outperforming BTC. And from what we have seen in the past few months, like 2 months or 3 months, people are actually swapping from BTC to gold. Like this is a scenario that we have witnessed so far, and it's being freely reflected on the chart. Like, of course, we don't know how long this scenario gonna last, but the narratives of digital gold for BTC, it does flip very often. So it depends on how BTC is doing pairing with USD. So if BTC is going up in USD term, then people like to say, oh, the BTC is still a digital gold after all. But vice versa would happen. Like if BTC crashed, like correct in value, then people like to say, okay, maybe this is just some digital internet magical number money after all. So they don't take it very seriously. So point being, what we are witnessing is definitely we haven't seen in years. Like gold is beating not only BTC but the S&P 500. So Peter Schiff, of course, is going to be very happy. But like, how long could this last? My personal take is that since the world is getting more unstable and geopolitics is getting so ridiculous, there's still some room for gold to go up even higher. But the period I'm watching is actually Q2, Q3 2026. Then maybe we're gonna get correction, and by then, like when gold has reached a top, BTC has. I would say usually if we follow the pattern, then BTC would bottom out around that time. So that also aligned with the our prediction on BTC's price, where BTC could possibly go in the coming month or two. So I would speculate Q3 is going to be the bottom of BTC, but like we will get into the TA in a bit. But first of all, let's take a short break. And after that, we're going to look into the BitGo IPOs on the New York Stock Exchange. So we're going to do a deep dive. So stay with us on Roxham TV.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxham, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxham, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
All right, guys, welcome back and thanks for sticking around with us. We're now going to dive into BitGo, and this is a big one for Bitcoin because today a Bitcoin native company just rang the bell on Wall Street. So BitGo is not an exchange, not a meme stock, but a Bitcoin custody firm. So BitGo just IPO'd on New York Stock Exchange, and if you have been wondering whether institutions are still serious about Bitcoin in 2026, I think this is your answer. So here's the headline and let's get into the details. So BitGo officially went public today on the New York Stock Exchange, ticker symbol BTGO. So BitGo priced the IPO at $18 per share and raised about $212 million in new capital. This is one of those moments where crypto goes from online narrative to real capital markets. So if you're new, like BitGo is basically a Bitcoin custody and security company. So in simple terms, they help institutions store and protect large amounts of Bitcoin and crypto. Because if you are a fund or a bank or ETF provider, basically big institutions or trading firm, whales, you can't just put billions on a hot wallet and pray, or even in cold storage. Custody is plumbing, and BitGo is one of the companies building that plumbing. Now, here's the real question: this IPO, real reason why IPO is important. Custody isn't hype. Custody is infrastructure. And when infrastructure companies go public, it tells you that Wall Street believes this industry is not temporary anymore. It's like the early days of payment rails, of internet infrastructure and cloud computing. So it's not flashy, very necessary and infrastructure stuff. And BitGo did something that was honestly perfect branding. They donated a framed copy of Bitcoin white paper to the New York Stock Exchange. So that's a statement. It's basically saying this whole thing started out the system and now it's inside the system. Bitcoin did not beg for permission. It built its own network, and now the biggest financial building in the world is hanging the proof. And this appears to be the first Bitcoin focused IPO of 2026. And the timing, I would say, it does matter because it tells us something simple. Institutions aren't just buying Bitcoin anymore, they are buying the companies that support Bitcoin. That's the next phase of adoption for ETFs, custody, compliance, capital raising. Bitcoin is basically becoming the full asset class, not just a trade. Now, if you're watching this as an investor, I know some of you guys are very curious of the ticker symbol, so BTGO. Like, there are a few questions that investors are wondering and asking. Does BTGO hold up after day one hype? Like IPO strength is all about following through, of course. And then the second thing we have to consider is that does this open the door for more crypto IPOs? Because once one firm gets a clean listing, the pipeline gets confident. Like, does it change how people price Bitcoin infrastructure? This is not about Bitcoin, the asset only. This is about the business ecosystem around it. So, clean takeaway for this news. IPO, so BitGo IPO is a milestone for Bitcoin becoming mainstream finance, not because it's exciting, but because it proves Bitcoin is now supported by real public market infrastructure, whether it's from custody to capital markets. Bitcoin companies aren't knocking anymore. They are now ringing the bell on Wall Street. So that's a next milestone we just tick off. All right, so speaking of Bitcoin, let's quickly hop onto the price action because I know a lot of you guys are waiting for this. So Bitcoin right now is sitting at 89.2K. Of course, we kind of like hovering around that line. So I told my community that it's going to be a very boring market and basically consolidating, and looks like we are going nowhere, but it's fine. And one critical level we are watching is, of course, that rising support we're building. Like, I'm not going to lie, I have my doubt. Is this strength going to carry on? Because so far I'm bearish. So what I mean is this, like if we end up losing this rising line, the support line, then we are risking to a much lower level, possibly 77K, so around that region. The reason why is that we happen to to find support. So that was back in February 2025. And then we found support here again, so March 2025, yet in April again. And back in all the way November 2024, that was the level that we found resistance. So previous resistance is going to be our support in the future. So this is a critical level I'm watching, and this is also why I've got a bunch of buy order around 77k. Of course, not financial advice, just telling you what the TA is suggesting me. And TA is all about probability, so calculating different outcomes and which outcome looks like is the most probable, where I will give you different scenarios for you to make your own judgment. That's all. Okay, so that being said, we are starting on the daily candles, so the shorter time frame. And one indicator I like to use recently is the cycle time frame. So there are different lines. It looks very complicated, but bear with us. So the blue line on the top is a 1 day cycle time frame, and then we have the pink one being the 3 days, and then the bottom one being the red line is the 1 week time frame. So in other words, like how it uses this is actually really simple. So you can see all the waves going up and down, up and down. So the top indicator is for people who like to trade. So swing trader. Okay, I like to day trade. I like to swing trade. So for my personal use, I like to use the 1 day cycle time frame quite a lot, because what we could pull right here. So if we zoom closer to what's going on, so when we go up, there's like a top that's forming, and then when we go down, there's a bottom that we form. It's like this is short time frame. So when we had the top, that happened to align with Bitcoin's price action as well. So same as here, when we top, that happened to be the top of Bitcoin as well, the price. So point being, we are using a short-term mentality when looking at the blue indicator in the top. So we always have to separate trading or investing. So you guys need to know what you want. So if you just want to do a quick flip, looking for quick money, then trading, you could get to know a little bit more in depth. It's always a good idea to learn a little bit of TA and also a little bit of trading, different indicators as well. So if you guys, however, you don't want to care about Bitcoin's tomorrow's price action or maybe even next month's price action, because we know Bitcoin ultimately is going to be the digital gold, and we are going to higher places with or without institutions, with or without government support. So if you're using that mentality, then sure, just focus on maybe 1 week, or so the 1 week time frame at the bottom, or maybe just like DCA. For sure you're gonna do well. So point being, why I keep mentioning this to my community is that you need to know your portfolio and you need to know your strategy, which one you manage to get some sleep at night. Like there's nothing wrong with DCA. Like long-term wise, DCA is the group of people that will generate like generational wealth, while trading like at the short term is for quick flip, like it's for 2% quick gain on the day. So for the trading people, like I do, I love trading. So for trading people, what we could do is that, just using one indicator alone, like when we have waves like this, like, if we see the top, then maybe that means Bitcoin is overbought, then maybe we're going to have a correction. So when Bitcoin drops, then maybe it's a time that there's too much selling pressure, and buyers are going to slowly scoop in because Bitcoin's price got too low. So this is how you read. And how you could do a quick flip is just like maybe set a 2% goal. It doesn't have to be huge, like looking at the cycle time frame. Point being, you need to know what you're doing in trading. And once you come up with that strategy and actually stick with that strategy, that would go a long way, speaking from a personal experience. So this is the 1 day time frame, and if we zoom closer, as we are taking up yet again. So that means, so usually how a full cycle play out is around like a week, despite we are looking at the 1 day time frame. You could set it up for 1 hours or 4 hours as well, but like I like to look at the 1 day time frame. So you could like pull a few trades, setting up the few buy orders around this, but I would do it small, like maybe 2%, but do it very constantly because like I happen to find dopamine when I'm trading. So point being, looks like we are going up. So seems that I gave up a early prediction when we enter January. So of course today is 23rd of January, and since what I said in the beginning of 2026 is that there are higher probability that we'll end up with a positive number in January 2026. Reason why I'll say this is because, okay, if we look at October, November, December, we have 3 consecutive red months. And judging from the pattern before, like if we have 3 consecutive red months, usually the 4th month, we're going to end up with a positive number, though it doesn't need to be significant, like maybe just like a 0.5% gain. But point being, usually we'll end up with a green month. So this is how we predict January. So right now we do 2%. Like this doesn't always happen, but it happens like 6 times throughout the entire history of Bitcoin. So let's see. So today is 23rd. For the next week, if we manage to close that with a positive note, like if so, that would align with the 1 day cycle time frame on top. So since this is going up, like again, it doesn't have to be like, oh, okay, when you say go up, so that means we're going to go back to the next major resistance of 100K. So that's not what I mean. It means that, okay, by the end of January, we're likely going to end up with a positive return. And this is what it suggests. And since for a full cycle to play out for the 1 day cycle time frame, the blue line that we're watching here, that means like, okay, we're going to, the strong resistance I'm seeing, like we could be hovering around 90K a little bit. Like anything above 94K, I have strong doubt. Like I don't have much conviction that we're gonna get to 94K. Like though maybe touching 94K, but like if we zoom out, we could see 94K is actually a level we keep finding resistance. So we are hovering around like basically for how long? So since this December, so the beginning of December 2025, like whenever we get close to 94K, and not to mention like we just like wicking, so touching here and get rejected, and 3 times, and then the 4th time we finally broke that resistance, but like only 2 days later, the daily candles we crashed below 94K. So 94K is a level I'm watching. So since the daily is suggesting going up, so I will be watching like maybe we squeeze inside a little bit until the end of January. Like since the 3 days suggesting 3 days already going down, and not to mention a 1 week time frame, we have topped. So 1 week we reach 93, so somewhere 83, somewhere around that. So that is pretty high. That means the 1 week gonna slowly come down. So we're gonna have a correction one way or the other. Though 1 week, that means it's gonna be the next a month and a half or 2 months. So that's why everything is aligned to the probability that I'm looking at. Like maybe, okay, we're gonna end up seeing a positive return. It doesn't have to be significant. It could be just like 1% or 0.5%. Like point being, January looks like we're gonna close with a positive month. but like February, I'm really, really bearish. And this also aligns with the let's go ahead and close all the drawings. And this actually aligned with the weekly candles for now. So let's hop onto that and let's close, actually just make it smaller. So let's actually pull out the Ichimoku cloud because that is the leading indicator. So these indicators, this time frame, they're lagging indicator. I would say it's a little bit similar to RSI, give you a little bit more information where the trend is heading to. And speaking of the leading indicator for Ichimoku cloud, like we could be spending, because last time in the bear cycle in 2022, we spent like 3 months inside trading this Ichimoku cloud. So if similar pattern plays out, we are also eyeing in February. So both indicators, so the cycle time frame at the bottom when I was doing the daily is suggesting that as well. And then the weekly is suggesting that as well. So February, point being, okay, we could be, so February right now, okay, January, we are still in the second phase of bear market, but like February, very likely we're going to enter the third stage of the bear market. So my setup right now, okay, I'm still waiting for that tiny pump. So for the Ichimoku cloud, it suggests, okay, we could pump to even 104K, like, okay, maybe a small wick. Though, like judging from the daily that I was doing the analysis, I don't think there is much strength to pump up to 104K before February, so before mid-February, but let's see. So the time frame I'm looking at, so since we broke the we got inside the Ichimoku cloud, that was back in November 2025, and then if we say like spend 90 days or somewhere around that, like 3 months, that is the rough time frame I'm looking at. That will bring us to 9th of February till 16th of February before really losing the Ichimoku span B line. So right now sitting at how much? $86,000. Like before really losing that, and we're gonna head to lower places. Like again, if we were giving out the shorter time frame, 77K is a level I'm watching before heading closer. Like I'm not calling 77K as the cycle bottom, but like looks like there is some major support around 77K. So that's what I'm watching. All right, so that was the quick Bitcoin TA. Let's actually hop on to Ethereum for now, because like we haven't talked about Ethereum for quite some time, and looks like Ethereum in terms of how the network is doing is actually doing amazing things. And this is like one of the quiet Ethereum signals that can turn into a big move later. When I mention later, I'm talking about 3 months later, because right now Ethereum validator exits just dropped to 0. Like we hop to the validator queue, we have the entry and exit. So exit dropped to 0 for okay, right now it's rising a little bit, but like the red line, we went from November, so October it was a really high number, but the rest is history because of what happened on 10th. But like to be fair, like we start dropping on 13th of September, and it was a downhill fall off the cliff. So that means like no one is lining up to unstick and leave, while a huge amount of new ETH is lining up to get in, because the entry for validators just went up significantly. So especially since if we take the bottom of like 22nd of December, we went up drastically. So the real question is Ethereum setting up for a supply squeeze? So the headlines here is that like pretty simple. In simple wording, Ethereum's validator exit queue is now around 0, so it dropped significantly. Exits are being processed basically instantly. And at the same time, Ethereum's entry queue exploded to around 3 million ETH, which means new validators are waiting up to like 45 days just to start staking. Think of it like this, like the exit door is empty, the entry line is packed right now. This matters because like staking is real supply lock up. If exits are 0, it means validators are not rushing to cash out. There's no big wave of unstake ETH about to hit the market. And even if sentiment flips later, people can't just like rage quit instantly. If everyone suddenly wants to unstake, it requires time, and that delay slows down panic selling. And yes, this is a legit signal that sell pressure from validator is low right now. At least it's slowing down. I'm not suggesting that Ethereum would go up, go to the moon, because the market cycles is just like not supporting it, and Bitcoin is still in a bear market. All right, so point being, like now the entry queue is more interesting because if entry queue is rising like this, it usually means institutions are allocating, whales are staking, and large players are positioning long term. This isn't retail hype. This is slow money committing, and it's happening while ETH price has been like honestly going nowhere and very disappointing versus Bitcoin, and even of course like versus gold, which makes it feel like positioning first and price later. And now it's not just sticking. Ethereum network, the whole usage is going up as well. So we have the TVL, of course, like we topped in that align with the validators numbers, the top validator queue right here. So we top around September 2025, somewhere around that, and then we have like a huge crash. But you could see like the number is slowly going up. So if we zoom closer, we could see the uptake of the TVL. That means more people are utilizing the Ethereum's DeFi ecosystem. So this is one signal. Like daily transactions are going up as well. So Ethereum daily calls hitting some new record high, and fees are still not exploding like the old days, of course. That's still a big deal because Ethereum's biggest enemy used to be high fees, slow user experience, and people leaving. But now layer 2s are helping Ethereum scale. So even with more activity, the chain isn't choking. So the setup looks like, okay, more usage, more staking, and less exits. So that is a pretty clean equation, in my opinion. And just quick numbers for context. If we hop onto the staking figure, because that's why institutions are getting in right now. So staking APL right now, okay, it's not like that high. It's hovering around like 2.8% to like 3%, like somewhere around that. It depends on the whole network conditions. So it's not like insane return for sure, but for institutions, that's real yield in ETH terms. And if they believe ETH can run again, they are thinking, okay, I'm going to get yield. And also, if ETH goes up in price when the bull market hits again, that could be a generous return, generous profit. But like now, let me be clear. This doesn't guarantee ETH pumps tomorrow. Like I have to mention that yet again in this live show. ETH can still get dragged by macro risk of moves, by Bitcoin dominance, and by the ETF flows, or basically by Donald Trump, because like the whole market feels like being dragged by Donald Trump right now. But this validator data is one of the best behind the scenes signals we could get for now, because it shows that what long-term holders are doing. So they are staying in, they are locking up the supply, and they are adding more. Personally speaking, like from my personal take, like very likely this surge in the validator queue could be Bitmine, because they have to stick with Ethereum. They dip the toes already, so they need to stick with the stance. So this could very much be BitMine or Tommy himself. But okay, clean takeaway. Ethereum exit queue is 0. Nobody is rushing to leave. Entry, so entry queue is exploding. People are rushing to join. So this is why, this is what a supply tightening looks like before it shows up on the chart. But it could take months. So patience is really key in the market, and especially for even more volatile asset like Ethereum compared to Bitcoin. All right, so that's pretty much all the news I want to cover in today's show. So last call to action, make sure to give us a follow on Twitter. So my personal Twitter is jamjamcrypto_io. Make sure to follow Roxham TV as well, because we have regular updates coming out, not just about Bitcoin, but about global news, about AI, about okay, here we have the US. So point being, there's so much valuable content we update on a constant basis. Make sure to give us a follow, and make sure to follow us on YouTube as well. So again, my live show is Monday to Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my show live, don't worry, it's also available. The replay is also available on my own YouTube channel, so being Jam Crypto YouTube channel and also Roxham TV YouTube channel. Okay, thank you guys for watching. I hope you guys have a great weekend. I'll see you guys on Monday's show.